Now focus on Foods and Inns Limited. That stock is in focus today because Radhakishan Damani's Dirav Investments bought a 4.7% stake in the company. It's a small investment, but by a marquee investors company. And that's why the stock has been very active today, up about 20%. Let's get in the management to know more about this company. What do they do? What is the outlook like? Amey Dupelia, who is the Chief Financial Officer of the company, joins us right now on the phone line. Amey, good having you. Thanks much for joining in. Can you tell us what is Foods and Inns all about? We know that, whatever I know or whatever you know is that you are an exporter of processed tropical fruits, purees and vegetables. Is that the nature of the business or do you do something else as well?
Yes, that's precisely it. But effectively, we consider ourselves as a premium processor of fruits and vegetables in India. So we have access to a lot of farmers as well as we have a lot of infrastructure and factories in place to process a wide range of fruits and vegetables around the country, mostly mangoes, guavas, papayas, as well as we do a bit of frozen snacks as well for the export market for the ethnic Indians outside of India. So we're largely involved in B2B food processing.
Is your revenue and your income mainly from the export market? Which segment is your business primarily from?
I would say primarily it's exports. Historically, since 1970, we've been focusing on exports, and we only started in the domestic market post-2007. As a split, we're about 65 to 70% export, and the balance 30% is domestic, which is the area that we're seeing scale up over the last couple of years, with the consumption story really playing through for us. And the local companies picking up more volumes, having more fresh food products, fresh juices in the market. So all of the pulps and purees that go into those products primarily come from us.
So what has historical growth been for Foods and Inns from the export market? And since you come into the domestic market in 2007, how has growth been in that duration? And what is going to lead growth going forward for you year on?
Well, so the first part of the question, we were 100% export till 2007. So between 2007 and 2019, we have been in the domestic play, for which today we have 30% of our overall sales in the domestic market. And I think going forward, there's huge potential in India. I myself come from more of a financial service background, but I've kind of transitioned into the food space in India. And there's immense opportunity. The way I look at it is India's pretty forward-thinking in food processing. The government coming through has a lot of support, not just for processors, but for farmers as well. I also think it has the most potential to scale up in the future. We are getting lots of volumes that are coming through, as I said, in the domestic play, and that is supported by domestic consumption. And I would say that millennials are really kicking in. There's less time on their hands. There's more consumption. The median age of India is 31. It's going to be 31 till 2030. So the opportunity is there. I also think we're moving from a largely unorganized play to an organized play in the food sector. And this is supported by GST, demonetization, extremely helpful in our space. Obviously, we deal with a lot of farmers, so that really brings transparency to the system. And I also think we have a lot of younger players coming into the space, which is excellent. We have these Indians living abroad who are coming back and have a lot of startups. We support a lot of startups in India. We might seem like a big B2B player, but I'm spending a lot of my time personally supporting the younger guys who have the most potential to scale in the future. So I consider them as the young leaders and as someone who will be adding value to the industry going forward. So that's how I see it really move going ahead in the future.
Amey, would the nature of the business remain B2B, or is there any plan to be B2C as well?
We have considered that. All our experience, our expertise sits in B2B. However, we are looking at a B2C play, as well as we're looking at some potentially inorganic growth maybe in the future as well. And see how we can capture that to get a play in the B2C space. But it's expensive the way we look at it. We have to set, it's almost an unlimited budget. And we're kind of working our way through to set us up in that frame, as well as getting the right people on board. because primarily we are B2B, as I mentioned. And to get into B2C, we want to make sure we have the right plans in place to really amplify our growth in that space.
So what's the story like, Ameya? I mean, what do you do from here on? You might consider B2C, but you're not 100% sure. As I see, you have 4 or 5 manufacturing units as well. You are into exports, you are into domestics. How do you explain what Food and Inns would be 5 years from now compared to what it is right now?
So our plan going forward, and we set these business strategies in place, for a 5-year period, and keep revisiting it on a yearly basis, and we discuss it with our board. But it's very pointed. It's not very expansive, but we focus on a couple of key things, such as keeping our factories going through the year. We are currently working at close to anywhere between 40 to 60% utilization. So we want to try and increase that as much as possible. That covers our fixed overhead costs. We're also looking at new product development. So we're looking at more value additive products. So things like butternut squashes, avocados, beetroot. The volumes might be small, but there is a market in there who appreciate more value additive products. Again, we have to build those farmer relations to get direct access to that. Another challenge for us is really pesticide management. Because Indian farmers are not very well aware on that space, and we're training them to use the right pesticides because consumers are becoming aware, and because we deal in export markets, we're very well versed with that. So we're really focusing on that's what I call value in the food space, is managing the pesticides, managing the traceability, and also doing something new, as well as really maximizing our asset utilization. We had a lot of capex in the past. We see that capex unwinding over the next couple of years, and then really bringing us value in terms of top line as well as bottom line. And I think the last point is just being more frugal. And I think that's what everyone in business needs to be doing, especially in India, is we're trying to do more with less. We're trying to find opportunities in adversity, and most of all, just keeping it simple. We're not spending a lot of money on something too fancy and going into really complex technologies. As much as I hear about that and through my travels in Europe, we're just trying to keep it simple, but mostly focus on a balance between our top line and bottom line growth, as well as take advantage of the macro.
It's all also about growth potential. What has the average growth for the company been like on a year-on-year basis, be it revenues, be it volumes? And is that something that you look to change for the better in a big way, or is that something you hope to maintain?
No, absolutely. I think for us, we're seeing our volumes growth quite significantly year on year. And for us, that's anywhere between 10 and 20%, because there are a lot of other players in the market. We've seen a lot of farmers turning into processors lately. But again, it's a cash flow generation. It's a cash flow business. So a lot of people come in and then slowly move out as well. The Foods and Inns has been there for 45 years. I mean, we're the only listed food processor in the market. So we have a lot of access to the backward. So we're growing on our volumes, and that's really our focus. With the revenue, we really can't say because it depends on the fruit price. So it's a mixture of volume as well as fruit price. If the fruit prices are low, I might do more tonnage. But if the prices are low, then my realization will be lower. So I wouldn't comment on revenue. Definitely the idea is to scale it and grow, and I'm sure it will with the way we're seeing growth in the domestic market. But our focus is mostly on the tonnage volume and pushing that number up, at least 12 to 20% year on year.
Are you seeing any hindrances or challenges in the current landscape of the market? We've been seeing a few others within the industry that have faced volume growth challenges. Do you think you will face the same?
I think our only challenge is cash flow management, to be honest, as well as working with farmers, working with traders. Those are our two biggest challenges. From a cash flow perspective, this business is not really measured on top line and bottom line, according to me. It's measured on how well you can generate your cash. How are you matching your inflows and outflows on a daily basis? My only objective is to be in a positive net cash flow position every single day. My conversations with my customers are more around how can I change my payment terms? How can I work towards better payment terms? And how can you take your shipments a lot faster than you do before? Because that helps me get the money in the company, pay off my loans, reduce my interest. So it's all about cash flow management. That's the real challenge we're facing, but we've got a good team in place to really tackle that. Along with that, as I said, the challenge and the hindrances are also on the farmer side, and the lack of awareness, really, the lack of training. I think the farmers are really driven by making money as soon as possible. We are looking at more organic ways of growth with them. We are working on we're working with a lot of farmer communities, training them on pesticide usage, training them on sustainable farming. India might not pay a premium for this at this point, but I think our foreign markets are paying a premium for sustainable material. But to train them, it's a process. It's easy to sit in a AC office in Bombay and talk about it, but it's about going down there in the farm, sitting with them, understanding their challenges, and really showing them the value that if you do use natural pesticides instead of chemical pesticides, there's not just a benefit to you in terms of price, but also to the end consumer.
So my last question to you now remains with regards to your market share. What do you own of the market currently? What's your market share? And do you expect to increase that meaningfully?
Well, at this point, the promoters have 45% of the market share. Overall, it's been maintained that way in the past. We have infused some capital over the years in the past, mostly because we've been working with a lot of consortium bankers, and they have obviously requested us to infuse some more capital. Of course, we have a low capital base. That's the plan as of now in terms of the shareholding per se, and the rest of it is
Ameya, if I can come in, we wanted to know what's your market share currently in the organized processing market. How much does Foods and Inns command?
I would say we have a healthy, between 25 and 30%. So we are one of the major players in the market. We are one of the larger processors. We have blue chip customers all across the world, not just in India. We control about 25 to 30% of the overall processed fruit and vegetable market.
You're talking about the world market share, really? 25%?
No, this is India.
India, yeah, that's all. Yeah, okay. Yeah. One more question. This 15-20% growth rate that you mentioned you aim to achieve. One, would you need to set up any other processing plants for the same aside of the 4 or 5 that you have? And two, would you need to raise any money for the same?
In terms of additional capacity, as I mentioned, we already are not at optimal capacity.
Okay, so you don't need to do that.
But we will be trying to expand on that. So not really in terms of capacity, although we are thinking of building some more infrastructure to support more value additive processing. And in terms of funds, yes, we are already working with the banks in order to get a line of credit for that expansion in terms of tonnage.
Would you from 344 crores, my last question on this interaction, FY18 revenues 344 crores, would you have ended FY19 with that ballpark 15-20% growth rate?
So you're talking about FY20?
No, FY19, the year gone by. Do you think you've done about a 15% growth rate over FY18?
That I can't comment on right now. So we're yet working through our numbers. But yeah,
not an exact number, but ballpark. You think you've kind of...
I would say it's largely in line with last year with some growth, but I wouldn't say exactly 10 to 12%, no.
Okay.
All right, Ameya, we'll leave it at that. Thank you so very much for joining us on this conversation.